I know today is not a very great day. Why? Because market has taken a huge beating. And I think what has happened that medium small cap have come under heavy selling pressure and there was a red ink across the board. But let's before that I discuss more about that. Let me just put a full disclaimer that investment in the securities market are subject to market risk. Please consult your financial advisor before buying or selling any stock. And past performance no indicator of a future returns. I distinctly recollect Balachandra Saab. I think he had put a question. It was last week only, am I right, Amir?
Yes, sir.
That whenever I come in front of a market falls, and Amir today told me, देखो सर उन्होंने बताया था और आज वापस मार्केट गिरा आप जाने वाले वेबिनार के ऊपर. So I thought let me just see whether this comment which was made does it have holds water or not. So I thought let me put it in a data analysis form. So I'm also going to put if I come in a webinar, does market fall every times or not? And what we have done this data analysis from 1st March. Am I right?
Yes.
1st March se kiya hua hai. So let's do that. But before that, let me just start talking about what happened today. I think there was a selling pressure across the board. It was not that, one particular sector was left out or one particular market cap was left out. I think it was across the board. And what happened in the medium small cap came under heavy selling pressure, almost cracking by 2%. Normally, we don't see this kind of a crack happening in the indices level. There was some amount of fear also in the people's mind. Why? Because there were more declines. If you look at the advanced decline ratio, for every one advance, there were 9 declines today. So you can see the carnage that took place today in the market. Even yesterday, market was not so great. So I think since the May month started, market has become little topsy-turvy. Now during this time, one thing which has clearly played out is that risk-off strategy. And if you look at today, despite so much carnage in the market, 2 sectors closed in the green. One was the FMCG index and another one was IT index. They both closed in the green. Reason is very simple. We don't have to analyze too much. Reason is very simple. Why? Because when there is a risk-off strategy, you will see people finding shelter because of good corporate governance with this company, no borrowings in the books, business is more or less certain in the sense you don't see much of a business outlook changes. And last but not the least, this company keep giving, they are more investors friendly in terms of either buyback or dividend. And FMCG companies, despite the missed targets, I think everyone seems to be talking about double-digit volume growth in FY 2025. And if monsoon is going to be good, rural economy should come back. Demand from the rural economy should come back, and that should really help the FMCG companies. So today, IT and FMCG did very well. Again, remember when the IT companies came out with the numbers, they were not so great. FMCG companies, when they declare the numbers are not so great. But what basically makes them little exciting is that future outlook. Number one, and the technical reason is that risk-off strategy. If market has to slide further, rest assured, IT and FMCG may continue to be the outliers in that. We continue to believe market will remain volatile, whether we like it or not, and that's a stand that we have taken time and again. And we continue. When during the good time also, when the market was surging, we did mention that we do expect growth to come off in the mid and small cap, and that could make market. And see, sometimes there is also a cascading effect. So, for example, I'm not saying that's going to happen tomorrow, but that's what I'm trying to say. If market is to sustain, keep falling, there will be some kind of a margin call coming in, and that could create more trouble for the market. And hence, my request to all of you will be extremely careful on what company you get into. Don't do trading. Expand your investment horizon. Don't invest for 3 months, 6 months or so. Invest for 3 years and 5 years. Because this market is going to volatile, it's going to remain volatile, it's going to test your patience, and I don't want you to do something which are not good for your financial health. So my request to all of you, market doesn't need any reason to fall. And today is a classical example. There was no reason why market has to come down so heavily. Some of the companies have fallen by 5-6% without any fundamental reason. So don't expect that market will give a reason to fall. And sometimes the market will fall and people will attribute that fall to some reason. It's the other way around. So that's how it's going. Market is going to behave. Extremely choppy, extremely volatile. Market will give you sometimes a fear factor kind of a stuff. But don't lose heart. Remain calm and composed, because that's the beauty about the equity market. Market will not allow you to make easy money. If that was so easy, 140 crore population would have been invested in 140 all in equity market. Everyone would have been rich, right? That doesn't happen in the real life. If you are getting too easy money, remember there is a sign for danger. And that's exactly what has happened in last 1 year, when the money making was extremely easy in the equity market. The good time doesn't last forever. It has to somewhere, and sometimes the end like this is more disastrous than the gain that you would have made. Why? Because when these things do go turn, I'm not going to scare you, I'm going to give you a practical advice, because I've seen many boom and bust market cycle. I'm not saying this market is going to bust, sorry, I'm not going to say that. But what I'm trying to say is that be careful what you are going to getting into the company. Otherwise, whatever the money that you would have made in FY 2024, that all money can go out in FY 2025. So be careful. Expect market to remain choppy, and once you do that, you will stop having a tendency of buying anything for short term or for the trading. Now, if you look at this carnage that took place, Nifty FMC index was up by 2%, Nifty IT was up by 0.77, but otherwise, everyone like Sensex was down by 0.52, Nifty was down by 0.62. So, if you look at the order, okay, it's a very interesting order, and that gives a really idea, okay. Sensex was down by 0.52, say Nifty by 30 companies, 50 companies, 100 companies fall more, 200 companies index fall more, BSE 500 companies index fell more. What does this index really create? That across the board, as the basket kept increasing, the fall has been more and more severe. That means mid and small cap did perform very badly. Like mid cap index is down by 1.9%, small cap is down by 1.6%, and realty was down by 3.5%. Nifty metal was down by 2.4%. These are the sectors which are risk on sector. When there is a risk on, these sectors will do very well. When there is a risk off, these two sectors should do very well. Am I right? That's how the market. So remember, depending upon what view you have on the market, please remember, when there is a risk off, FMCG and IT should do well. If there is a risk on, realty should do well, metal should do. And look at the CPSE index. If you look at the PSU Bank, Nifty CPSE, they have also come under heavy selling pressure purely because of profit booking. Now, one school of thought says that if the BJP is going to retain the power, more reforms will happen, but more reforms basically should happen, help PSU, isn't it? But the fact is that they basically seen a decline. So there are forces working it. Be careful, don't get into a wrong company at the top of the price. Chances are very high that you will repent your decision. Why did you buy that company at the top of the cycle? YTD, what happened to the market? 7.6% again in the what we call small cap. Nifty's. So Nifty and Sensex are almost at the same level what we are. We are almost at the 5th month and very close to the level we have closed at 2023. So market is going nowhere. Try to understand that. The only thing is that small cap is up by 7.6, mid cap is up by 12%. Somewhere they should also give up some of the gains, which has happened today, but somewhere they will give up the gains. FIs, they sold in the month of April, they are selling in the month of May. I don't have the data as of today, but till yesterday they sold near about 2,133 crore. Don't expect FIs to come back positive in May. They will be negative. And I think most probably we will see FI coming in post-election result, because they don't want to live with the uncertainty what happens and what not happen. So that's what our sense is. So we predicted that April will be an outflow from the FI. In the beginning of April, you only suggested that that's what exactly what has happened. We are saying in the beginning of May, the FI for the month would remain negative. Now, if you look at Indian numbers, every new set of numbers is pulling down the Indian numbers in terms of bottom line. If I had come last week, if I was there in front of you, I think it was 21 or 22%. That's what my memory serves me. Now the Y-on-Y growth is only 18.7% for this one. Our prediction, which is announced at the beginning of April 2024, is that 16% year-on-year growth in net profit, and taking the total net profit to about 4 lakh crore. And we continue to believe the number will be very closer to what we predicted, because till now the result season is basically moving in that direction. So remember, there is no big positives right now in the result season. Only thing, everyone is pinning hope that Indian markets, Indian economy should do well. Why it should do well? Purely because of what we call the reforms being taken place by the government post forming the government, number one, and number two, the monsoon is likely to be good, and everyone believes. And even yesterday, there was a data which came out from the WTO that says that the trade throughout the world, the growth in the trade would be much higher. I think, if my memory serves me right, it's 1% last year, and this year would be near about 2.5%. So that's everyone is pinning hope. And now yesterday, US employment data came, and that does gives an impression now. It increases the scope for a rate cut. So this will keep happening. Sometimes people will think there will be more rate cuts. Sometimes people will think there will not be rate cuts, and so on and so forth. Don't give too much importance right now. Focus on the company that you hold in the portfolio. If the fundamentals are good, valuations are reasonable, please continue to hold. If fundamentals are good but the valuations are very rich, don't expect to make money. Please lock in the profits and move to the another company. It's simple strategy. You don't have to complicate the things. Now Balachandran, so do we have that video? Just those who are not able to relate to this, what I'm going to present now. Let's play the video. Balachandra sir is saying, I noticed based on the last 1.5 month experience that whenever a webinar is scheduled, that day market always corrects. Is this coincidence? Maybe something for your team to ponder upon. Sir, I did not notice that kind of a coincidence, but good now since you told me that this is what happens. So what I can do, maybe, as a strategy, if that's exactly what you're saying is happening, जिस दिन मेरा webinar, my webinar schedule, am I right? It's all available on the site. तो जिस दिन webinar नहीं है आप उसमें long कर दो, जिस दिन webinar है उस दिन short कर दो. I'm just kidding. Don't do it actually. But I have no idea, sir. Maybe it's just a coincidence when I'm in front of you, the market is correcting. When I'm not in front of you, market bounce. In fact, we keep joking with Mohit. Mohit, whenever he wears a green t-shirt, we said, Mohit, as market upar jana. Normally that happens actually. And Mohit does not have a red t-shirt, so I will not be able to comment on that. But what I've observed that whenever he wears green t-shirt, market goes up. Same way, if you are saying I'm in front of you and that day market corrects, then you know what to expect on Tuesday. Am I right? Because I'll be in front of you. Tuesday, am I right? My webinar? Yes, sir. Okay, Tuesday. Then market should go down Tuesday. Let's see, Balchandra sir. And today, the Tuesday, the market went down. I think so. It's a spot on. But is it a coincidence or is it not a? So what I did actually, I've highlighted in the bold, my QnA. So if you look at QnA 3 times, it has closed in the green. But 5 times it has closed in the red. Okay. So if you look at the ratio, the observance seems to be right that there are more reds than the green in last since 1st March 2024. Now, it's just a coincidence. I don't have any logical reasoning why that has to happen. But this is what is trending out today. When Amir told me, I thought I think it's a very good observation on the part of Balachandra sir that this is what has happened. I don't know whether Balachandra sir is attending to his webinar or not. But what I also observed that whenever I present equity outlook, in last 2 times, I think, out of 3 times, 2 times it is positive, 1 time is negative. Because 3rd May it was negative. But otherwise, you are right actually. So I can see more 1, 2, 3, 4, 5, 5 green, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 times red. So you are right. What happened in last since 1st March, there are more reds than the green when I come in front of you. Now, if you think this is very insight for you and you want to position your trade based on that, you can do that. So what you can do, if you are waiting for buy good quality company, wait for my webinar to happen. On that particular day, you will be able to buy at the lower price. That's what I can say jokingly. But with this, let's open the floor for question answer. Kumar sir is saying how much fall expected from now till the election results are out. So I don't know, sir, whether we should look at only till election results are out or maybe post-election also. Our in-house view has been that market may not rise much even despite the BJP coming to the power. Why? Because it's all there in the price. So, but we had predicted in the January 2024 that Nifty could go to 19,000 level, and we continue to maintain that level even now, because that's the downside risk that market can have. See, the good. I always love the market which falls substantially. Why I love that? I don't like that market which which slowly start eroding your value, because that's more painful, and it basically lasts for a longer period of time. If market is to correct 2%, maybe for 5-6 days at a time, and that's a very good market. Why? Because it will bounce back also very quickly. The market which falls very grinding manner, that grinding manner will test your patience, and that also test your investment philosophy. So that kind of market is not very healthy. Why? Because even the rebound will be more grinding one. So people do lose hope when that happens. But my sense is that 19,000 logically it should come down to. See, as I was presenting my equity outlook, that we crossed 400 lakh crore. In tank, net profit would be near about 15-16 lakh crore. So we are trading at a very rich valuation. So from that point of view, upside is limited, capped, but downside risks do suggest. And our sense is that 19,000 Nifty can touch. Rajan, good evening. Request you to throw light and express your views on the banking sector, both PSB and private sector banking, housing and steel sector, besides the approach towards investing in good companies in the aforesaid sector, either before or after general election. So, sir, our sense is that the banking and the NBFC space will see the growth coming under pressure for the very simple reason that credit deposit ratio has become little too high, so that will not allow banks to lend very aggressively. So that's one. Second thing, RBI is going to keep putting more and more checks and balances with the banks and the NBFCs to ensure that it does not create a systematic problem for the country. We must have read that unsecured loans are rising very fast, and that's not a very happy sign for this one. Why? Because there are no collaterals available against that, number one. Number two, it seems that people are borrowing money and spending. If the income does not rise, that loan can become what we call non-performing, and if that becomes non-performing, bank will have to take a hit. So our view on the private sector bank is little muted. We are not expecting a very great returns to come in. We stated that in our 2024 outlook also. Public sector bank, there is one hope that there could be more reform that can happen within the public sector banks, and if that is so, the public sector banks can be a good choice, provided your stock selection is right. We do own one public sector bank in our portfolio with a substantial holding, but we have more view on the company, on that particular bank, than the overall sector. But between PSU banks and the private sector banks, our sense is that public sector banks should do reasonably well. Housing and steel, while housing may, there are reports coming in that, housing seems to be running ahead of the fundamentals. More and more people, I'm talking about the listed space, okay? Some of the companies are commanding a very rich valuation, thinking that what happened in FY 2024 may repeat in FY 2025. but it seems that there is some amount of a resistance from the buyers to pay higher prices. And I think that could weigh on them. So let's wait and watch what happens. So right now we are not very bullish on housing sector. So it's a clearly straight no from our side. Still we believe it should do well. Yes, there are issues with the imports, and a lot of steel companies also wrote to the government saying that we should have some kind of an anti-dumping kind of a stuff, so that it doesn't flood the steel market. But today, the Indian market. But if you look at the risk reward, it does give an impression that steel should do reasonably well. So how you should go about approaching towards investing good companies in aforesaid sectors? Very simple, sir. You look at the score of the company that is available on the MarketsMojo website from these sectors, and the one which has the highest score, please go with that, provided the score is above 70. So it's the simplest way, Rajan sir, you can deploy to create wealth from the equity market. Pankaj, is it good to have a PMS investment or SIP in selected blue chip? Is it right time to invest or wait for months or so? So, Pankaj sir, what we are doing in our PMS right now, we have launched triple A strategy. What does this triple A strategy means? Systematic staggered strategy. So we are not investing the fresh money coming in the PMS at one go. We are going to invest this anywhere between 0 to 120 days, depending upon the market conditions, and that's what we have defined. Because reason is very simple, because we do expect market to remain little volatile, and if that is so, it's better to save the money for the investors. Now the question is, Pankaj sir, how long your duration is. If you are there for 3 to 5 years minimum in the equity market, then this doesn't matter whether you invest now or you invest for a month or so, because eventually this kind of a thing doesn't make too much difference unless we expect major correction, which we are not expecting. Am I right? So I think if you wish to invest, you can invest now, but invest in a staggered manner, whether it's in blue chip companies or if you come to PMS. Anyway, we are going to invest in a staggered manner, anywhere between 0 to 120 days. Frank is saying, I would like your comments. Providing exposure to real estate can help advisors build resilient portfolio for their investor clients. Yet, investors get only passive benefits of this asset class through public market real estate, trust or extended ETF holding companies with indirect exposure to the infrastructure, farmland, and timber. We often hear from advisors that they want access to private real estates for high net worth and mass affluent clients, but that's struggle because of the lack of choice. So you are right that I don't know whether it's a resilient portfolio or not, because that's what you made a comment about. By investing in REIT or exchange traded funds is going to result into a resilient portfolio. Not very sure. If you look at the returns also, I think they are not very great. Am I right? Especially when you compare with the equity as an assets class. So you do run a risk of an assets class, but you don't get compensated for that. So today, I think the rate is available only for the commercial. It's not available for residential. And there are certain concerns there, basically, for the very simple that it has to be complete project and it has to be so on and so forth. So I think residential real estate has not really seen the light of the day. Commercial REITs are available, but I'm not a very big fan of that, for the very simple reason. It's maybe making a lot of sense in country like North America, but in a country like India, where the yields are 7-8%, doesn't make much of a sense. And then you look at the appreciation, maybe 4 to 5%. So if you look at the combined gain, about 11 to 12%. But you do run a risk of sometimes that occupancy is not there. If there is a demand slowdown, then what do happen? The property, where the location that you have, is it going to be remain in demand or not demand? I'll give you a classical example in Bombay, city like Bombay. Once upon a time, Ballad Estate was a prime residential area, a prime commercial area. Today, no one basically, it's a complete deserted look. If you go to that place after 6:30 p.m., once upon Nariman Point was the most sought after premium place for the commercial. Today it is not. In fact, BKC has become a more robust and more this one. So that's another danger that you run into. And you know that what happened the North American real estate, some of the commercial real estate, how badly they are struggling right now. to service. Many people are basically tenants are vacating that place. Why? Because they can't afford to have this one. So I don't know if it's a resilient portfolio or not. But and if you are mass affluent, then there are AIFs available in the country right now. And I met someone who happened to be working for a Motilal Oswal real estate, and he was making me understand that they are running AIF funds basically. When they offer the investment in the real estate, where they fund the builder, and builder in turn basically give the security collateral, and they run. But you do run a risk of, if for some reason builder is not able to complete the project, you run into a problem. But that's a product is available through AIF. So if you are an affluent class, my request would be to go explore AIF rather than exploring REIT or exchange traded funds. Popat by Chaudhary saying, sir, when will the market stabilize and upward trend? So I don't have any specific answer to that. Only thing I do believe that market is going to remain volatile, at least for next couple of months. And that's one of the reason our PMS, we are not investing at one go. We are investing fresh investment anywhere between 0 to 120 days. And we will prepone or postpone our staggered investment strategy based on the market conditions. So that's what we say. But Popat, you need to understand that you don't want to invest in the market for 3 months or 6 months. Am I right? If you're investing for longer horizon, then this volatility is going to be there. It's part and parcel of the market. So why to make so much, give importance to it? Just relax, enjoy the volatility, and move on. Don't look at the portfolio on a daily basis, which I don't do that. Maybe you can look at maybe once a month or maybe once in 3 months. That's fine. Don't look at the portfolio on a daily basis. WikiLeaks says there seems to be no debt, end to debt US debt. Earlier, the French used to warn us that the US debt is unsustainable and will eventually end in a descent. Today, people like Jamie Dimon has also admitted that that is the case. Where do you see the going, and when? How do you think the US dollar will lose its supremacy? What will the repercussion when this happens? So Nikhil said this, fear has come time and again. And I do believe when the rate of interest have remained so high, to service the US debt is a problem, no doubt about it. When it was zero or closer to zero, it was much easier. When it's closer to 5%, it becomes little difficult for you to sustain that. Is it going to collapse? I don't think economy is going to collapse because of that. But dollar, will it lose its supremacy? Answer is yes, it should. On the contrary, if you look at it, despite this challenge, in 2024, dollar is appreciated against all legacy currencies. In fact, dollar has strengthened too much in 2024. Fortunately, India, we have not seen that kind of a depreciation. Other currencies, like if you look at other currencies, rupee is basically more strengthened despite this fear. So I don't think US dollar supremacy will come down, but I don't think we have an alternate choice as we speak. One of the reasons people are investing more and more, central banks are investing in a gold, purely because they want to be little safe, rather than sorry kind of a stuff. One reason why we say Nikhil ji is that rupee should appreciate against the dollar purely because I think purely because of that US will eventually run into a problem. If that is so, I think rupee actually should strengthen against the dollar. But are we looking at this problem in next 3 months, 6 months? Answer is no. Are we looking at this problem in 1 or 2 years? Answer is no. This problem will become a problem for the US maybe at least 5 to 10 years down the line. So immediate threat, I don't think it is there. So don't worry that US is going to collapse or US economy will collapse or US dollar will collapse and it's going to create a catastrophic effect on the world market. Answer is no at this point of time. And see, remember, the things will keep changing. We don't know what's going to happen, but right now doesn't look like an immediate threat to the world economy or to the US economy. Ratvik is just a joke. A word Purnati was used at the Ahmedabad cricket match. So, sir, are you trying to refer to me? Are you saying that I'm a Panoti for the market, that when I come in front of you, the market goes down? Maybe the days are bad, so that may happen. There will be a days, where market will go up when I come in front of you. what to do, Dr. Sarang saying what to do currently, should we avoid momentum stock and invest in undervalued stock, ETF or a folio in case? So my sense is that momentum could take a backseat if the momentum does extremely well when there is a momentum in the market. If there is no momentum in the market, they normally tend to take and they tend to fall much steeper as compared to undervalued stocks. Dr. Saab, if your time horizon is minimum 3 to 5 years, then don't try to time the market. See, timing the market is extremely difficult. If the market is to fall further from this level, so even if the market is looking good, you will not have guts to invest. Why? Because at that point of time, there will be news floating in the market. Then market will fall further, and you will not invest. And then market will rebound, and you will keep waiting on the sideline to invest. So my sense is that please invest in undervalued stocks. That's the best way to deploy your funds. Lakshmi Singh, since in this volatile time, should we sell mid and small cap and beyond case? Also, if mid and small cap buy or strong buy, thanks. So what we have done, Lakshmi ji, is that in our PMS, I can tell you what we did in PMS. In the beginning of 2024, almost 90% of portfolio will consist of mid and small cap. Today, the 90% is large cap. So what we did, we actively moved out of small cap. We actively locked in profit in mid cap. And today also, whenever a mid cap company goes up by certain threshold, we lock in the profits, irrespective of our view on that company. So my sense is that, what we are doing, I would recommend the same thing. The reason why we are doing, because we see merit there. So we do believe there is a froth in the mid and small cap, and I've given many media interviews. If you read that media interviews also, we consistently said that mid and small cap looks little frothy. There is a scope for corrections, and hence be careful. Now, if the companies buy or strong buy, what should you do? See, today we are not buying in PMS, but as a retail investor, if you wish to go ahead and buy, but keep very close eye on that counters. Why? Because if that, if the buy or strong buy can become a hold, if the script has to fall. Am I right? So be careful with that actually. And don't take too much exposure. Even if there is a buy and strong buy, don't take too much exposure right now in a mid and small cap. This is not a time to go aggressive and increasing allocation to mid and small cap. In fact, the time has come to increase allocation towards large cap and not in mid and small cap. क्या हुआ? Vishal Soneji, in current market, can I start daily SIP in model portfolio stock till 3 months? Is weekly SIP in that portfolio? Daily SIP तो थोड़ा सा difficult लगता है, because our system will not know that you are going to do daily SIP. Am I right? If at all you want to do, you can do monthly kind of SIP to model portfolio. That's fine. Daily doesn't make sense. Even weekly does not make sense. Prasad, if I have to start PMS now, do I have to remit 50 lakhs in one shot, since PMS will invest in 3 months? What amount of funds are pending at the fund investment? So, yes, sir. If you have to start, you have to invest, you have to give us the 50 lakhs. We can't onboard you unless you, because the minimum threshold as per the SEBI guidelines is 50 lakhs. So I need to have a 50 lakhs. What happens to that money which you are not going to invest 0 to 120 days? Am I right? That money will remain in the pool account. We are exploring a liquid base, but what we have realized is that the returns are not so fantastic. And if you invested in liquid base, and if you wish to get out of that at some point of time, reinvest that amount in the equity market, sometimes we may lose out on the opportunity. Suppose if the market has fallen substantially today, and I feel like today is a time to buy in, since that money is liquid base, I will not have liquidity on that day to buy. Am I right? So what would happen? I'll miss out on that opportunity and if you look at on an average, the liquid base gives you 5.5% kind of an yield. I'm not looking at any transaction cost to it. If I remove the transaction cost, works out to about 4% or so in a year. So if it is 3 months, I'm looking at 1% extra by investing in liquid base, which I don't know whether I should do it or not. So I'm also still grappling with that. I'm still not made up my mind. We have spoken to. Only good thing about that, when you invest in liquid base is that You don't need to pay brokerage on that. That's what I've been informed. I don't know now. I've been informed there is no STT also in that. So even I need to check that. But if there is a STT and there is a brokerage, then it takes away a lot of plus points of liquid investing in liquid base. So I'm contemplating, but right now it will remain in the pool account, sir. If you are not investing that amount. Bala Sundaram sir says, as you pointed out, the FI has been selling constantly. If as you pointed it out, they don't want to invest in the face of uncertainty concerning the election, assuming that the ruling party continues to post the result. When FI start pumping money, can we predict that the market will exhibit positive buoyancy? Please share your thoughts. So not necessarily, sir, that if that event's over, they will come lock, stock and barrel and invest in equity market. No, not necessarily. It's also a function of the global, for what happens, what are the factors at play, whether they want to lock in profits, whether they want to increase exposure to India and so on and so forth. Very difficult to say right now. So if you look at our house view, FIs have invested very heavily in FY 2024. And what we have observed normally is that in one particular financial year, if the FIs invest very heavily, normally the next year is tepid funds, tepid inflow. So, and this is irrespective of what happens to the politically, am I right? So our sense is that don't expect too much money from FPI, irrespective of what happens to the election result. Today it's uncertainty relating to the election. Going for something else could be the reason, and hence we don't expect FIs to come down very heavily in Indian equity market, at least in next 4 to 5 months. At least next 4 to 5 months. Ganesh, can you please explain AIF in a little more detail? Asking because NPS also allow a certain percent in AIF. I don't know, sir, whether NPS allows to invest in AIF, and I may be not very well versed also. AIF is alternate investment fund, where the minimum investment is 1 crore. And when Mr. Frank asked me affluent, I assume that those where 1 crore can be called affluent there. So AIF works more like a PMS only, and the ticket size is 1 crore there, and they can invest into real estate, they can invest in other that liberty is available in AIF, and they invest to what happens is, sir, that they will collect money. So suppose you have to commit 1 crore, they are not going to ask you 1 crore at one go. There will be drawdown, in the sense they will keep asking you money, abhi itna do, abhi itna do, abhi utna do, kind of stuff, and that they will ask you for the money, that AIF will ask you money. You have to give that money. You can't say that, suppose they ask you 10 lakhs right now out of 1 crore. And then you are, for some reason, if you are not able to pay next installment, that's not a choice. It's that even if the market is down, you have to supposed to pay that. You need to, if whatever commitment you have given, you are supposed to fulfill that commitment, otherwise your money has been gone, whatever the amount you have invested. So for example, if you have invested 90 lakhs and 10 lakhs you don't have, you can't back out from the deal. You have to give that another 10 lakhs to complete that 1 crore commit. Other 90 lakhs law technically can go down, can become zero for you. Now what they do is AIF does, like in real estate AIF, they will collect money from you, they will give it to the builder. And they will take collateral from the builder of that building that he is going to construct, or the land is going to construct, or the land which he is going to buy. Am I right? That acts as a collateral. And as and when the building gets constructed and builder is able to sell money, this guy have a lien on that. Okay, there is an escrow account which has been created. That money will come to the AIF. AIF in turn will give it to the investors who is invested in the particular AIF. That's how the AIF works. If you need more details, maybe you can do Google search. If you are still not very clear after reading it, please come again in my next webinar. I'll take one more shot in terms of explaining more elaborate in this manner. Devki Samant, is it a prudent call to invest in model portfolio? Can we add funds in our existing portfolio to get away with the risk of stock selection? That's the best thing, Devki ji, best way to do model portfolio. Why I'm saying, see, why the portfolio as a approach is very good. Because when you take a portfolio as an approach, you are more systematic in your approach. So what happens, that you will take care of your market cap exposure, you will take care of your sector exposure, You will take care of your, that you don't invest in one company too much because you're taking a portfolio. So it's divided more in a prudent manner, scientific manner, and something that you do more in a systematic manner will always give you better returns as compared to the unsystematic manner over a longer period of time. So I agree with you. Please go. Yes, you can add funds in existing model portfolio also. There is no challenge there. So either you can create one or you can add to the existing model portfolio. Both are fine. According to me, if you don't want to increase the number of stocks, add additional money to the existing model portfolio. That's more sensible things to do. Praveen is saying, I have completed PMS process. As I expect market fall, should I invest now? Please go ahead and invest. As I told you, we are going to invest in 0 to 120 days. We are not going to invest 100% immediately. So please, since you have completed procedure, please go and start funding it. We will take care of your investment process. Don't have to worry about it. Naresh is saying, hello Sunil, thanks for always educating through webinar. It is noted that your IP and decision of exiting stock from list of reliable amount does not given one day to exit. Recently, at closing day, one stock is declared to exit from reliable list and IP score went down to sell, and next day that market opening, the stock can't be sold due to the immediately touches the lower circuit. Can't you review your IP and methodology to communicate information at least 2 or 3 hours before the save such losses? So Naresh ji, point taken. I will just copy this and just. So, sir, your point taken. Only thing, Naresh sir, I don't look at that IP. There's a different team that looks into the IP of the momentum turnaround candidates and the reliable performer. I'll definitely pass on that. My job is to take care of PMS, and PMS we don't do that buy and sell on this next day and so on and so forth. But nonetheless, I'll just pass on to the right person, so that this can be addressed. If you can help me understand which company that happened, I think there'll be much better way for them to look at it actually. Varun, your research is top notch. Mid-cap going down and FM going up. Looks like your PM is going strong even in this tough times. So Varun sir, we did. So April was the best month for us since we started our PMS service. And touchwood, we did extremely well. But having said that, we do believe that market is going to remain choppy, and that will have some impact on our PMS performance. What we are saying, investors, is very simple. Don't look at the portfolio. 1 month return doesn't make any difference. We are almost close to 9% up as a strategy in the month of April. But one doesn't define anything, am I right? What we are saying, remain invested for block of 3 to 5 years. And that's where the power of compounding will work. That's where the power of consistency will come into play. You are right, we did well in the month of April, but 1 month hardly matters to anyone in the portfolio strategy, right? In the wealth creation. My suggestion would be, if you are not a PMS customer, please come, let some professional advisor take care of your money. Probability is very high that he will do a better job as compared to what you are doing, because your human emotions will come in. Your discipline will not be able to follow discipline, and sometimes you will end up losing more than what you have actually made. I made a very in fact, I don't know whether you people follow me on Twitter or not, or LinkedIn also. I wrote that thing actually. So this is one nice So let me go back to that. What I stated. Okay, what I did actually. Okay, when I can see my activity. Yeah. Okay, so. So there is a book written by this, Nassim Nicholas Taleb. There is a book he wrote, is Fooled by the Randomness. In that book, he said option writers eat like a chickens but sit like an elephant. तो बहुत पैसा कम बनाते हैं, खाते तो कम बहुत कर, लेकिन जब करते हैं खाने के बाद जो प्रक्रिया होती है बहुत बड़ा एलिफेंट जैसा करते हैं वो. Same way, retail investors, I wrote that way. The same way, retail investors make a small amount of money during good times. But in bad market, they lose big time, like an elephant. So in a good time, they will make money like a chicken. But when the bad time comes, they basically lose money like a elephant. And overall, they basically don't make money. So that's why I said, if you remember, I had said it in my Equity Outlook 2024 also. the kind of money people made in 2023, if they don't act smartly, there is a high probability that you will not only lose that what you made in 2023, but it will dip into your capital also. And I see that's a strong possibility because this market is not going to be as broad-based what we saw in 2023. If at all the market really will come in 2024, that will be more narrow-based and more company-specific and stock-specific. That's what's going to happen. Ilton D'Souza, which sector to invest based on current market? We continue to believe defense should do well. We continue to believe railways should do well. We believe farmers should do well. We believe FMCG should do well. So these are the sectors we believe should do well. And IT, if you have a long-term view, even IT should do well. Right now, IT has a little short-term challenges because the numbers are not going to be so great. But a lot of negatives are there in the price. But if you have a little longer-term horizon, even IT should do well. And of course, capital goods and infra. I think the next government is also going to put a lot of money in that. Could you illustrate how you assess undervalued stocks? So that's there are different experts have a different way to look at. If everyone had the same view on undervalue, then everyone would buy the same company, right? No one will sell that company. So different experts have a different way of looking at the things. To make the life simpler for our investors, what we have done, we have made a score of the company. So what you should do, Raj sir, is very simple. Look at the score of the company. If it is 70 and above, buy that company. If it is 70 and below, avoid those companies. Simple as that. So they make your life easy. But normally, so that's the way you can look at it. There's another way you can look at the valuation on our website. If the company's valuation is what we call attractive or something, or very attractive, that means that company is undervalued, and maybe you can go ahead for that. So these are two-way approach you can take. Either you look at only valuation as a one parameter, you look at all four parameters in totality, and look at the score of the company. Both, anyway, whatever method suits you, please do that. But there is no standard definition. There are bookish standard definition, but market doesn't work that way. जो book में रहता है वो book में रहता है, real life में कभी होता है. That's why I don't want to unnecessarily give you bookish knowledge which is not going to help you. That's why I'm not explaining that. Dr. Rahul Kamble sir, where we can find PMS services? So sir, I'll ask someone to reach out to you, and my team will reach out to you and will help you with this. मुझे इनका email भेज दीजिए राहुल सर का, डॉक्टर साहब का. My team will reach out to you, sir, and will help you to explain what the products are, how you can be onboarded on a PMS service, what are the risks associated with that, what are the kind of what is the investment process, and so on and so forth. Will explain you that. Someone will explain you that. Amir says that's a time up. There are no more questions from you, and if that is so, for me to say a good night to all of you. I'll again come in front of you. No, not this. So this week I will not be there, so you can relax. So don't expect market to fall, because if I come in front of you, the market falls. On Thursday I'm in front of our PMS customers, but on Friday we are launching a stock of the month. So there will be what we call release of new stock of the month, which we do every 10th of the month, and do come and attend that webinar. Again, I'll see you on next Tuesday with Q&A with Sunil Damania. Till such time, good night, take care.